Hi, my name is Mark Crunk, and I'm a loan officer with Barrett Financial Group and a real estate agent with Resident Realty. Today I want to show you how to purchase a home with less than $1,000 out of pocket using a 0% down payment USDA home loan and using seller concessions to help with closing costs and to also possibly buy down the interest rate. A USDA home loan is a government-backed mortgage program designed to help people buy homes in eligible rural and suburban areas. It's backed by the U.S. Department of Agriculture, not a bank, and the goal is to encourage home ownership in lower density communities. One of the biggest advantages of a USDA loan is that it offers 100% financing, meaning no down payment is required. However, that doesn't mean buying a home with no money at all. Closing costs still exist. The good news is USDA loans allow up to 6% in seller concessions, which can be used to help cover closing costs, prepaid items, and even buy down the interest rate if negotiated properly in the contract. USDA loans are only available for homes located in USDA eligible areas. Despite the name, these areas aren't always farmland. Many qualify as suburban towns just outside major cities. Another key rule is household income limits. USDA looks at total income of all adults living in the home, not just the borrowers on the loan, and your income must fall within the program limits for that area. While some lenders advertise a minimum credit score as low as 580, qualifying at that level can be difficult. Stronger credit, stable employment, and manageable debt-to-income ratios greatly improve approval odds and loan terms. USDA loans are for primary residences only. They can't be used for investment properties, vacation homes, or short-term rentals. The USDA loan can be a powerful tool, but it is not a shortcut. Understanding income limits, property eligibility, credit requirements, and how seller concessions works make the difference between frustration and a successful purchase. This example is for educational purposes only, but if you want to see how a USDA loan might look using your numbers, timeline, and location, that's where personalized planning comes in. The strategy that I like to use when trying to get into a home with as little out-of-pocket expense as possible is to look for a home that has had a price reduction and has been on the market for a little while, as that usually shows a sign of a possible motivated seller. Here's an example of a hypothetical home that is currently listed for sale and has had a price reduction of $15,000. If we can get $15,000 in seller concessions, that will usually be enough to cover most closing costs and also buy down the interest rate. What we want to do is take the current list price and increase the purchase price by the amount of seller concessions needed in order to achieve our goal. In this scenario, the home is currently listed at $275,000, so we increase the purchase price to $290,000 and ask for $15,000 in seller concessions. This will allow the seller of the home to still get the amount that they are wanting to sell the home for, which should result in a high probability of success. Remember that the maximum that a buyer can ask for in seller concessions with a USDA home loan is 6% of the purchase price. One of the biggest challenges of this strategy can be the appraisal, so hopefully when the home was originally listed, the listing agent priced it correctly with what homes in the area were selling for. Most of the time, your agent will be able to determine if the offered price will be the appropriate for the home to appraise of that. We will use the USDA eligibility map when we locate a home that we are interested in to verify that the home is in a USDA eligible area. Breaking down the numbers on this particular hypothetical scenario, if negotiated successfully, we offer $290,000 for the purchase price and ask for $15,000 in seller concessions. These numbers are based upon interest rates as of February 26, 2026, and a credit score of 620. With the seller concessions, we are able to buy down the interest rate to 5.375% with an APR of 6.132% and pay most of the closing costs with a total out-of-pocket expense of less than $100. Property taxes and insurance on this scenario are estimated, so the monthly payment and prepaids and reserves, which are a part of the closing cost, may change, but this will give you a pretty good idea of how this strategy can work in your favor when purchasing a home and trying to come out of pocket with as little money as possible. Each real estate transaction is unique, and results may vary depending on the circumstance. We can also break down the numbers if we didn't increase the sales price and just come out of pocket with the closing costs and purchase the home at $275,000 with no seller concessions and a par interest rate with no buy down. The par interest rate as of February 26, 2026, based upon a credit score of 620, would be 5.875% and an APR of 6.455%. Total out-of-pocket expense on this hypothetical scenario would be about $9,000, and the monthly payment would be about $2,075 per month, which is really close to the monthly payment if we were to increase the sales price and buy down the interest rate. Now remember, these numbers are hypothetical and may change slightly depending on taxes and insurance and the time of closing. Depending on your circumstance would determine which option is best for you. If you do have the funds to pay for the closing costs, then the better choice would be to not increase the sales price and just purchase the home at the lower price. If you don't have the money for the closing costs, then the option to increase the sales price and negotiate seller concessions to help pay for those closing costs and buy down the rate might be a better choice for you. I just wanted to present a potential option for you to consider. If you would like me to see if we can get you qualified for a USDA home loan, please reach out to me and we can see what the numbers look like for you. Thank you so much for taking the time to watch my presentation, and I hope you have a blessed day.